From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It was the meeting of the minds. President Trump and Fed Chair Jay Powell in the Oval Office today. Welcome to the Thursday edition of Balance of Power with breaking news from the White House. I'm Mathieu alongside Kailey Leinz today at World Headquarters in New York on Bloomberg TV and radio. Kailey, interesting to imagine these two gentlemen together after all the rhetoric that led up to this moment. And it does appear, based on what we heard from the Fed, Jay Powell did not tell Donald Trump everything he wanted to hear.
Yeah, well, he certainly didn't say what the path forward for monetary policy would be other than, according to the Fed, to stress that it will be dependent entirely on incoming economic information. Reading between the lines here, not dependent on the true socialing of President Trump. Of course, I do wonder how the tenor of their conversation around the economy may be different, knowing that tariffs are about to be pulled back materially because of a court ruling that essentially says those blanket 10% tariffs, as well as the elevated tariffs on China, Mexico, and Canada related to fentanyl, can no longer stand. That's right.
We've got a few stories to cover here. And that, by the way, you just mentioned was the biggest story until a few moments ago when we learned about this meeting, Kailey. There's a news briefing about to begin at the White House. The press secretary will likely be talking about both. We haven't heard, interestingly, from the president yet, but we could later this afternoon. He does have a swearing in on the schedule. Just don't know if reporters will be in the room yet. But we're going to spend the next hour breaking all this down, beginning with a report from Tyler Kendall live at the White House.
Yep, and we'll get some analysis from someone who used to be the general counsel at the U.S. Trade Representative. Greta Peisch is going to join us as we consider the various legal mechanisms the president could still work with in order to enact his tariff policy, even if IEEPA has been taken off the books for now. We'll get into all of that ahead this hour, but we begin with a market check, and we're in New York with Charlie Pellet as he checks things out for us today. Charlie, it's good to see you.
Thank you very much. Big warm welcome to New York, and we begin with developing stories, recapping, resetting headlines that you brought us in the past 30 minutes or so. A second judge has blocked some Trump tariffs in a small business case, and the story everybody's talking about right now. Fed Chair Jay Powell met with President Trump at the White House. That from the central bank in a statement. It represents their first such meeting since the president began his second term. Now, the Fed did put out a statement saying Chair Powell did not discuss his expectations for monetary policy, except to stress that the path of policy will depend entirely on incoming economic information and what that means for the outlook. Now, stocks have moved higher since our last update. The Dow, the S&P, NASDAQ solidly in the green right now, looking at a gain of 0.1% on the Dow, up 33, but the S&P up 0.4, up 24, NASDAQ up 0.6%, and the Russell 2000 index of small cap shares up 0.2%. The 10-year 4.42%, the 2-year 3.93%. Gold is up $35 the ounce now for the precious metal, a gain of 1.1%. West Texas Intermediate crude down 1.3%, $61.05 a barrel, and Bitcoin now down 0.5%, 106,750 on Bitcoin. Lots of earnings news to sift through. Nvidia shares remain higher, 4.2% gain there after earnings, and C3AI surging after earnings, up 26.6%. Salesforce reported last night, down 5.3%, and Hewlett-Packard Inc. also after earnings, down now by 8.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go. Balance of Power continues right now. They are here in New York. Once again, your hosts, Mathieu and Kailey Leinz.
All right, Charlie Pellet, thank you so much. We are here in New York today, but that doesn't mean that there's any shortage of things emanating from Washington to talk about. You've got a tariff ruling on the one hand that, at least for now, has limited the president's ability to enact the full sweeping nature of his tariff policy. On the other hand, President Trump is not just focused on trade today, but also on a meeting that just happened at the White House. We've just learned about the first time since Donald Trump's second term began that he sat down in person with the chairman of the Fed, Jerome Powell, knowing that Jerome Powell is not always called that, at least if President Trump is the one speaking. Too late is the nickname he uses, Mr. Too late. Don't know if that gets used anywhere outside of True Social for face-to-face interaction or not. But what we do know, according to a statement from the Fed, is that Chairman Powell made it clear that decisions of the Fed will be made, and this is a quote, based solely on careful, objective, and non-political analysis, Joe.
Therefore, too late. if you ask the President of the United States. To be a fly on the wall, we want to learn as much as we can about this right now. We're just on the precipice of the White House press briefing about to begin with Secretary Caroline Leavitt. Just outside the doors of the briefing room, we find Bloomberg's Tyler Kendall. What do we know about this meeting, Tyler?
Yeah, hey, Joe. So we're still waiting for additional details, but the Federal Reserve has confirmed that this was on President Trump's invitation that the Fed Chair Jerome Powell came here to the White House today. And they said that they did not discuss expectations for monetary policy and that any future path of policy is going to be data dependent, as we often hear from the Fed Chair. And Kailey read this quote, but it's probably worth repeating. They said that any decision will be based on, quote, careful, objective, and non-political analysis. Now, of course, President Trump has said that he has no intentions of firing Jerome Powell, but ultimately we know he's been heaping on the criticism in recent weeks that he would like to see the FOMC ultimately cut rates. And even as he does pile on this criticism, of course, it comes amid his tariff plans. President Trump often says that his tariff plans will go hand in hand with lower interest rates, but they're defined by just so much uncertainty, which the administration says is strategic, but of course makes Jerome Powell's job harder as it puts him in between a rock and a hard place when it comes to inflation and any expectations of weaker growth. Now, interesting enough, we did hear from Chicago Federal Reserve Bank President Austin Goolsbee today, who said that if big tariffs could be avoided, whether that be through deals or potentially a court order, ultimately that could pave the way for the central bank to cut interest rates, given the underlying strength of the economy and the direction of inflation.
Well, Tyler, let's talk more about the president's tariff policy, which was dealt a blow in court yesterday as the judges unanimously ruled that IEEPA and the way he was trying to use it is not applicable for his sweeping tariffs. The administration obviously appealing that decision. But what comes next in terms of his pursuit to enact these levies on trading partners?
Right, Kailey. So the administration really earlier this morning saying that they are prepared to take this fight to the Supreme Court. They are appealing it, and they say if they are not given immediate temporary relief when it comes to this ruling, then they could take this to the Supreme Court for emergency relief as soon as tomorrow. Now, at the heart of this ruling is that the U.S. Court of International Trade ultimately decided that the administration didn't correctly invoke IEEPA, the International Emergency Economic Powers Act, when they put forward their reciprocal tariffs. The White House had been arguing that persistent trade imbalances amounted to a national emergency, but the court said that that didn't really meet their definition, their justification for an unusual or extraordinary threat as outlined in the law. The administration, though, is really pushing forward here, and we heard from senior trade advisor Peter Navarro on Bloomberg television earlier today, who said they still have some levers they could pull.
We think we have a strong case, yes. We will immediately appeal and try to stay the ruling. But at the same time, the court, interestingly enough, basically said we were right, just use different rules and laws. So nothing has really changed here in that sense. We're still, as we speak, having countries call us and tell us they want a deal.
So, Joe and Kailey, keep in mind that this ruling extends to the so-called reciprocal tariffs. It also extends to those other instances where this White House has invoked IEEPA, including for tariffs on Mexico and Canada, as well as China. It does not extend to those sector-specific tariffs that have been invoked under Section 232 on the grounds of national security concerns.
All right, Bloomberg's Tyler Kendall live on the North Lawn of the White House for us here on Bloomberg TV and radio. Thank you so much. And we want to hear a little bit more from Peter Navarro, who Tyler just pointed out, the trade advisor at the White House, who had an extended conversation about these policies on Bloomberg surveillance earlier today, also digging in specifically to the justification around IEEPA. This is what else he told our colleagues.
There's no question that there's an economic emergency with respect to both uses that we had. One is we are in a world where China has killed over 1 million Americans with fentanyl poison, and we took this step to stop that. We will continue to press on that. At the same time, we invoked that rule to stop what has been 20 million illegal aliens streaming into our country, driving down wages, taking jobs away. That's an economic emergency.
So he says there's no question about this being an economic emergency, but we want to get another opinion now and turn to Greta Peisch, partner at Wiley Rein, also former general counsel at the Office of the U.S. Trade Representative. Greta, welcome back to Balance of Power. I wonder if you are surprised by this ruling, if you think the administration has a point that actually there was justification for the president to use this authority, and how you think ultimately the Supreme Court might come down on this if indeed it escalates to that level.
Well, the thing about this case is that it is such uncharted territories. And I think that this has been a theme for the administration. They're really pushing authorities in the trade space beyond what they have been used for before. This was true in the first Trump administration, and it's true now. And that really makes the outcomes of these cases a bit unpredictable, which is maybe why we see such surprise today of the outcome that came out of the CIT. But there's going to be a lot of twists and turns to come with the motions for stays to hold the order, both at the lower court, also at the Court of Appeals, potentially going to the Supreme Court tomorrow. So, you know, I think we don't know where this path is going to take us, but I think there's going to be twists and turns along the way.
Well, isn't part of the story here, Greta, that nothing actually is going to change? If this White House is seeking a stay, then pretty much everything stays in place. You add Section 122, Section 232, we're all apparently experts on this stuff now, that the White House feels like it has a pretty strong hand beyond the emergency argument, that when it just comes to basic procedure, they're going to keep doing what they're doing.
I think that's right. I think that's what you heard from Peter Navarro. I think that would be consistent with the direction of the president's given and the importance he's put on this policy and the reasons behind it. So whether they prevail in the courts and are able to keep these tariffs in place, or if they have to look to another tool like Section 122, we just keep adding numbers to our number basket for tariffs. Yes, I think that you would say there's likely to be a continuation of this policy in one form or another.
So does it become then just a question of the timing it actually takes to enact the policy, Greta? Because if you need full investigations in order to use some of these authorities, that would suggest that he can't necessarily find ways to reimpose tariffs on trading partners by July 9th, for example, when the deadline for negotiations on trade deals is supposed to be.
Right. Well, you know, every trade authority has pluses and minuses. And IEEPA, the authority that has been, its use has been struck down, it's very flexible and very fast. And so that made it very attractive for the administration to use. And other authorities do have drawbacks. Some of them, as you say, require investigation. That's the case with Section 232, these sector-specific tariffs like steel, aluminum, autos, and there's a number of other ongoing investigations. That's true of Section 301, which is the authority that was used to put tariffs on China in the first Trump administration. Now, there's a new authority that was actually cited in the case in the order pausing or invalidating the IEEPA tariffs. 122. This is a balance of payments, balance of trade authority that hasn't been used before, doesn't require an investigation. So that could go on pretty quickly. Now, the downside there is it only lasts for 150 days, and you can only go up to 15% in the tariff level. So again, drawbacks, you have speed without authority, but there's limitations on its use.
Much has been made, Greta, of the fact that we got a ruling from judges appointed by Barack Obama, Donald Trump himself, and Ronald Reagan. And I want to turn you into a legal analyst for the purposes of this conversation, but how are you reading into that?
You know, I don't read too much into it. This is also, it's the Court of International Trade. These are experts on trade authorities. They come at it from a particular perspective. They've dealt with many of these authorities many times and thought about the delegation of tariff authority from Congress to the executive branch and what the contours of that may be. I mean, I think it's more about, to me, this court and how it thinks about these authorities than maybe the particular people who were on the panel in this case.
What do you think this means, Greta, for negotiations that are still ongoing between the U.S. and trading partners? Is there a material amount of leverage lost here if Trump and his proxies in the administration who are negotiating on his behalf can't say, look, if you don't agree to this, we're just slapping X tariff on you. If they don't necessarily have that power because the courts have said that they don't, does that substantially weaken the United States' hand?
I don't view it necessarily as a big change. And there's two things going on. One, for example, for the UK, the concessions they received were around not the tariffs that have been struck down yesterday, but around the 232 tariffs on autos, on steel, aluminum, on a potential pharmaceutical tariff action. And so many countries are still interested in those tariffs. And then again, I think there is the prospect of the administration using other tools to impose tariffs. And it's not just 122 and these 10 or 15% tariffs, but could they launch a Section 301 investigation with respect to particular countries and put in place the prospect of even higher tariffs? It's a possibility. And so, I think that trading partners are going to take a beat to assess the situation, what they're hearing from the administration, from Peter Navarro today, from the press secretary, from the president himself. But I think they're going to probably take the view that the administration, the president's going to continue to pursue this policy, and that they're going to have to operate under those parameters.
This is a court that not many people had ever heard of. I think before this story, when you're working in the office of the U.S. Trade Representative, how often are you interacting with the CIT, the Court of International Trade?
Well, it is the court that the trade agencies interact with. So any statute, so for example, Section 301, it's another tariff statute. There has been litigation ongoing since the first Trump administration. Was ongoing when I was at the U.S. Trade Representative's office. That was before the CIT, and it is that court of first instance that every tariff action goes to. So for those in the trade sphere, it's not obscure. It's where all of our cases and controversies funnel through.
And finally, Greta, we just have a minute left here, but knowing President Trump in recent weeks has said if negotiations with partners don't go well, that the U.S. is just going to set a tariff rate, tell countries what it costs to do business with the United States. Unless he pursues one of these other authorities, should we assume that he, in fact, isn't going to be able to do that in these weeks, that he won't have the authority to do so?
Well, it may be difficult for him to do so. There is an even more obscure statute called Section 338, which also has not been used and has been, it talks about unfair practices, discrimination. That's another potential tool. There's a lot of questions about the process to invoke it. So, never say never, but it will certainly be a challenge. And the president and the administration may need to jump through some hoops, do some work to fulfill the requirements of these statutes in order to follow through with that. But again, I think that the specter of higher tariffs, can be put in place immediately, even if it ends up being delayed in impact.
Because it can always be more obscure. We have Greta Peisch. Thank you, Greta, so much for walking us through all of this. Partner at Wiley Rein, former general counsel, the office of the USTR. And Kailey, we do have a headline coming out of the news briefing at the White House. Not a shock to be hearing from Karoline Leavitt today, is it?
No, and perhaps not a shock what she's saying either. She says the Trump administration saw another example of judicial overreach using his full and proper legal authority, hence the appeal. We'll have more next here on Balance of Power on Bloomberg TV and Radio. All right, Charlie Pellet, thank you so much. We're here indeed with Charlie in New York, but have no fear, Washington is carrying on just fine with its usual business without us present, including at the White House, where the White House press secretary Karoline Leavitt right now is briefing the media. Not starting to actually take questions from journalists yet. She just had a lot she wanted to say first, specifically on the ruling from last night, in which, of course, Trump's authority to use IEEPA to enact his sweeping tariffs was struck down. The White House press secretary characterizing that as another example of judicial overreach, saying that the trade court is abusing its judicial power, that Trump's rationale was legally sound, that courts should have no role here, except for maybe, Joe, the Supreme Court. As she says, the Supreme Court needs to put an end to this tariff challenge.
Yeah, she's hitting it all. This is, I'm sure, quite the moment to be in the briefing room. And when we get to questions, it could get a little bit chippy, as the press secretary's really the first since Peter Navarro spoke early today on Bloomberg TV and radio, the first member of the administration to throw back on all this and give us a sense of what exactly President Trump is thinking. He also, by the way, does have an event later on today, Kailey. It's a swearing in. You see this, the new chief of protocol. Not supposed to be open press, but he's got a way of opening these things to press. If he's angry, if he wants to talk, if he wants to make a point, that would be the time that he does it. As we play this to our panel, Rick and Jeanne are with us today, Bloomberg Politics contributors. Jeanne Zaino, senior democracy fellow with the Center for the Study of the Presidency and Congress, our Democratic analyst, alongside Republican strategist Rick Davis, partner at Stonecourt Capital. So, Jeanne, here we go in the briefing room today. The line: there's a troubling and dangerous trend of unelected judges inserting themselves into the presidential decision-making process. That was the press secretary a moment ago. You could apply that to almost anything that the president has done here and the challenges that we've seen on a legal basis. What's the White House's next move? Just keep the tariffs, ignore the court?
Yeah, I love the underscoring of unelected. Of course, they're unelected. Article 3, according to our founders, says they must be unelected. So that isn't keeping with the Constitution. She's repeating what Stephen Miller said yesterday, which was this is a judicial coup. We're living under a judicial tyranny. When the reality is, if you're going to push the boundaries of executive power in the way this administration has, if you're going to continue to do that, you are going to meet the resistance from the third branch, sometimes the first, not in this case, but the third branch that every other president has been the beneficiary of, or as they would say, has been the biggest frustration of their presidency. I mean, they just have to go back and take a look at FDR, how frustrated he was with the courts. He threatened to pack the courts. Joe Biden, Barack Obama. I mean, every president has felt this frustration. Of course, this presidency is pushing the boundaries even more. And so they're going to get this. It's nothing about a judicial tyranny or coup or overreach. This is the nature of Madisonian government, the way the framers wanted it.
Well, Caroline Leavitt isn't done talking about this. She just told reporters that these judges are trying to block the president's power and the policies he was elected to enact, Rick. But I wonder if that's how you look at it. It's not necessarily saying that he no longer has the powers given to him under IEPA. He just can't apply them in these specific circumstances because an economic emergency, as he describes it, is not existent right now.
Yeah, I think that, and it even goes deeper than that, Kailey, that IEPA isn't the appropriate vehicle to do this kind of trade policy. It really is specifically designed to create sanctions on countries that are in violation or of this economic emergency that was being discussed. And so I think there's a lot of depth to this decision. The fundamental issue that you were just talking to Jeanne about is, the basis of our government. It's separation of powers. The reason judges are the third form of government is because they aren't subject to the political whims of the electorate. And the founders wanted a system of checks and balances where the political system was checked by both the judiciary branch and, in some cases, Congress, and in some cases, the executive branch. So the first thing I heard out of the White House this morning was Peter Navarro, attacking the judges for not being elected. Well, maybe he should read the Constitution and the Bill of Rights and understand that that's the way it's supposed to be.
Well, so we're just going to be watching for the next missive on impeaching judges, I suspect, although maybe not from Elon Musk this time. Caroline Leavitt saying that the White House hopes the Supreme Court will weigh in, Jeanne. That's how this ends, right? This is turning into the Supreme Court show in this administration.
They're going to have a very, very long summer. They like to leave like a school year, have the end, go back home. I don't know that they'll get much of that. I do think they will appeal this up. I think the question is, does the court take it on an emergency? as an emergency appeal, or do they make it go through a regular order? I mean, that is going to be interesting. We've also got a decision coming out from the court this term on executive power. So the court's role here is, pronounced, and it's one that the Chief Justice has talked about, saying that we are here to set the limits, and it's something that has frustrated the administration. But the reality is that this is really the purview of Congress, and that is the big issue here. Congress has the power to tax. In this instance, they delegated some of that power in emergencies, as Rick was just talking about, to the president. And so Congress can also step up here. But I think about this case, one really under-discussed aspect. This case was filed by small businesses, similarly to the case that just came out where the judge blocked from Illinois, the Illinois toy importers being tariffed. So what we're seeing here is not big companies, the kind that we often talk about, the Coca-Colas of the world, the Adidas, the big companies, rather small mom and pop stores who, unlike the big companies, are not afraid to take Donald Trump and the administration on, because they know if they don't, they are out of business. But in the case of the big businesses, they have the facility, the ability to ride out these storms, and they don't want the blowback from the Trump administration. So it is the fight of these small businesses that's really so fascinating to me as they take it to the administration via these courts.
Well, when we consider that all of this is happening as this administration, Rick, is actively engaged with trade negotiations with a number of U.S. trading partners, this is something that Karoline Leavitt was just asked about in the briefing room as to why other nations would even continue those talks in the aftermath of this ruling. And she says they understand that the administration is going to win. We intend to win. We already filed an emergency appeal, and that they have faith in Trump. But if you're a trade representative from another country, do you take the threats of this president as seriously now?
I think you have to, because there are other tools that they can use. It wouldn't surprise me that later today they'll have the trade rep come out and talk about all the other tools, 301 decisions, 122s. I mean, there are ways that if the administration loses this case, that they can still prosecute a tariff war. And so it is not a threat without teeth. The difference is it's less random, it's not as extreme, and maybe that's even better, right? Put some parameters around the trade war so it's more predictable and less volatile. But you're still going to have to cut a deal with the White House if you're a foreign nation with a trade surplus. I mean, that's really the bottom line. And so wouldn't surprise me that all the negotiations keep going in order to get this behind them, because it will take some time.
Well, who needs the court here when you've got the taco? Jeanne, I bet you heard about this. The taco trade is what they're calling this on Wall Street. Trump, always chickens out. You threaten the tariffs, then you pull it back, and the market rallies. That's Taco Tuesday. We've seen this happen a couple of times, actually. And imagine being the reporter to ask Donald Trump about this. It happened yesterday in the Oval Office. Let's listen.
Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threat.
And, if I set a number at a ridiculous high number and I go down a little bit, I chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number? And because I gave the European Union a 50% tax, you call that chickening out?
Is the acronym fitting here, Jeanne? And are you surprised he got upset about that? Are you surprised he's not in the briefing room right now?
Do not call Donald Trump a chicken. My favorite part of that story was that even some of the people using the term tweeted out to the reporter, be quiet, don't tell him, because if you tell him we're calling him that, he won't walk back anymore. Investors not happy with that. The poor reporter. I think, by the way, Donald Trump should take this all as a win. He doesn't have 90 deals in 90 days. This isn't good economic policy. He can blame it on this court that none of us ever heard of until the other day. And he can say, listen, I tried, but now we have to just go back and I need to work on cost and inflation. It's a win for him. He should take it. But I don't think it's going to happen because he loves himself some tariffs.
Well, yeah, and he intended these tariffs to also be a way to raise revenue to help offset some of his tax cuts. Rick, in our final minute here, does this actually make that legislative effort harder in the Senate if they can't say, look, we have math to offset this?
Well, I think that the whole tariff discussion about having revenue is more of a talking point than a reality. I mean, there's very little that anybody can point to as to like what is the net receipts of the federal government and how they would apply. And the numbers are so massive, between $2.5 to $3.5 trillion of deficit add-on over the next 10 years. A few hundred million or billion aren't going to really make a big impact in getting votes. They've got a big hurdle in the Senate. A lot of people, Ron Johnson included, have already started staking out pretty tough stances on the massive amount of debt that this bill collects up on the federal deficit. And that's the issue they're going to have to figure out. And they're going to need a lot more than what's currently in the trade deficit category.
All right, Rick Davis and Jeanne Zaino, our political panel, joining us here on Balance of Power. Thank you so much. And we'll have more on that effort in Congress, the intersection with tariffs, plus the meeting that just happened at the White House with the chairman of the Fed and the president. When Patrick McHenry, the former House Financial Services chair, joins us straight ahead on Bloomberg.
The fastest show in politics on Bloomberg TV and radio, as we keep our eyes and ears on a White House briefing that's underway right now. Press Secretary Caroline Leavitt talking about the federal court ruling on tariffs that we've been discussing, as well as the meeting that we just during the program learned about between President Trump and Fed Chair Jay Powell. Kailey, the headline says it all. Trump told Powell in person the Fed is making a mistake on the rate call. We know that Donald Trump wants rate cuts. We know that the Fed does not see the conditions for them. My only question at this point is whether he called Jay Powell too late, his nickname for the Fed chair.
Yeah, I wonder if that one gets thrown around face to face. We do know, according to a statement from the Fed, though, that Chairman Powell didn't seem to indicate to the president that the Fed feels like it's making a mistake, not lowering interest rates, making it clear, according to their statement, to quote it directly, that those decisions are made based solely on careful, objective, and non-political analysis. We also should point out here, this is the first time these two have met in person since Donald Trump assumed the presidency for a second time. For all of the kind of vitriol that the president has thrown at Jerome Powell on social media or in various briefings, he hadn't actually had this conversation with him directly until today. It's
a day like this you wish you could talk to Patrick McHenry.
Good thing we can here on Bloomberg TV and radio. The former chairman of the House Financial Services Committee and now Bloomberg Politics contributor is with us from Washington, D.C. Mr. Chairman, we've obviously talked with you extensively before about the feelings the president has about the rate policies of the Federal Reserve. Meetings like this aren't necessarily unusual. The chairman has made it very clear he would never initiate a conversation with the president unless the president asked him to, which is what we understand happened here. But telling the Fed chair in person that he's making a mistake, do you expect that actually changes his decision making?
No, but I think it's also this is not unprecedented for the president and the Fed chair to meet. It is rare, yes. But I think what the president is saying publicly and what he said privately are matching up quite simply. The president has a very different view of inflation, has a very different view of Fed rate setting policy than does the Open Markets Committee and the chair of the Federal Reserve. And so for the president to air those his views and those concerns, I think it's fine to do. I don't think that changes the Fed policy setting. I don't think it changes the inclination of the members of the Open Markets Committee to change course here. But it also is an opportunity for the president to highlight in our political discourse his difference of opinion and his separate view of inflation and rate-setting policy.
Well, we owe it to the White House, Congressman, and the press secretary to deliver the line in full. What she said was, President believes the Fed chair is making a mistake by not lowering interest rates, which is putting us at an economic disadvantage to China and other countries. Jay Powell would tell you that we're at an advantage because we're not knee-jerk changing interest rates, and we're trying to create conditions for growth. How do you see it?
Well, I think that is, in fact, the case. I think the Open Markets Committee is using the best information that they can. I do think when the president has a critique of the Federal Reserve that they changed policy too slowly during the Biden administration. They did not raise rates at a fast enough clip to curtail inflation, and they were too late. In fact, I think Chairman Powell has said as much publicly. But right now, I think what the most important thing for us to do is get inflation in check. There's a lot of turmoil, obviously, with tariff policy. There's a lot of uncertainty with the current tax code expiring and a massive tax increase going into effect at the end of the year. And then an open question about whether or not we're paring down our federal budget spending enough and paring down the deficit enough to match what the Treasuries market is trying to tell us, that we're spending too much and our debt is too high. So there's a lot to react to and respond to. But I don't think the Federal Reserve is off base at waiting for more information.
Well, you allude to what the Treasury market is trying to say, and a former member of the House Financial Services Committee under your leadership, still one, in fact, Republican Congressman Byron Donalds was with us on this program yesterday and also called out the bond market specifically. This is what he told us.
I look at the bond market, and one thing is crystal clear. The bond market is looking at the United States, and they are saying, you better get your fiscal house in order, or we're going to charge you more to borrow money. No nation can thrive under that kind of a scenario. So we have to be serious on Capitol Hill.
And he went on to tell us, Mr. Chairman, that he actually hopes the Senate pursues steeper spending cuts in its version of the bill now that it's in its hands. The question is whether whatever the Senate passes can get through the House once more. Are you expecting that the Senate is going to address this in a materially different way?
No, but I think what the bond market is screaming at Congress about is to cut down on spending. The fact is, the one big beautiful bill that they're discussing, the reconciliation bill that they're debating, is in essence continuing the current tax code that we have today and extending it into next year and for the coming years. That's not a tax cut. What they're doing is avoiding a tax increase. There are some pro-growth policies in there that cost additional revenue to the federal government, yes, in the short term. There's a few new things like the political discourse on tax and tips, taxing tips, Social Security benefits, a few of those things the president talked about, and the necessity to pass the bill out of the House, which was changing the SALT deduction. Those things are all costly, yes. But in substance, the tax part of this thing is taking the current code and extending it. What the bond market is saying is that the cutting side, where you're getting federal savings, federal budget savings, is not enough. And so let's put that in context. What the House just passed was over 10 years about $900 billion to $1 trillion of spending cuts. 2 years ago, at this time, we negotiated, and I Garrett Graves, on Speaker McCarthy's behalf, negotiated with the White House for a spending reduction package to raise the debt ceiling. That resulted in $1.5 trillion of savings over 10 years. So for all Republican majorities in the House and the Senate and the White House to pare down spending by $900 billion doesn't stand up to what President Biden did at the bequest of Republicans. So that's small. And that doesn't even compare to what Republicans got put in place under Obama, Speaker Boehner did under Obama, which resulted in $2.1 trillion of savings over 10 years. So this is a small spending cuts package. Congress needs to listen to that, and I think Byron Donalds is right here.
Well, that's incredible perspective, and I appreciate your walking us back through that, Congressman. What does it tell you then when you hear, Byron Donalds is no shrinking violet. If he's hoping the Senate finishes the job and couldn't get it done in the House, then who can?
That's exactly the case here. And I think the high water mark for spending cuts comes out of the House, not out of the Senate. The tax policy change, I think what we're looking at is a narrower bill that makes it through the rules process in the Senate. A narrower bill that has less cost savings to the federal taxpayer and actually pares down the policy included that actually will reduce spending over time. That is not a good thing, and I think that is a big concern that the bond market is telling policymakers to look more have a tougher look at.
Well, especially if you consider that part of this fiscal picture was supposed to be tariff revenue as well, which maybe isn't going to be quite as robust in the aftermath of this ruling from last night on IEEPA. Mr. Chairman, I do wonder your reaction if you buy the administration's argument here that this court is wrong, that using those emergency economic powers is indeed justified in all of these cases.
No, I think there are a number of they have a number of authorities under tariff policy in the broader tariff policy basket that they can utilize. They may have referenced the wrong act in order to take the actions they've had, but the president has broad authorities on tariffs, and I think that this president will take those broad authorities and get a better court ruling using perhaps different pieces of law. But I think the tariff policy here and the president's actions here will stand, but I think they've got to do a better job of justifying where they derive their power and in the utility of that law.
Patrick McHenry, the Digital Asset Market Clarity Act has been introduced. I'm not sure what you think of the name here, but we've been talking a lot about a market structure bill going back to when you were running the committee. Based on the progress you've seen on stablecoin legislation, will there be enough Democrats to make this law?
Well, I think FIT 21 was a better name. And in fact, French Hill is the one who named the FIT 21 when it passed last Congress under my chairmanship. And that was his legislation. But I'm not much for congressional naming of bills, frankly. But the bill's a fantastic effort.
Clarity Act. Yeah.
Well, okay, fine. Call it the Clarity Act. But fit for purpose, when we have a fit for purpose regulatory regime, that's what we're going for here. You have a new technology that needs to have a new set of regulation. It is distinct from securities, distinct from commodities, existing laws. And I think this is a very good effort by congressional lawmakers. I think what we're going to see here in the coming month, maybe two, is that you're going to see a merging of the payment stablecoins bill that the Senate is likely to pass next week and a merging of the market structure bill. And I think the president will have one big, beautiful crypto bill on his desk before the fall comes.
But is he making it harder for this to be accomplished because he also has vested interests in crypto and companies that bear his name or his family's involvement is in? This is an issue that Democrats are raising, is potential conflict of interest here.
Doesn't make it easier. And it doesn't make it easier for congressional Democrats to do what they know is solid and real policy work that is necessary for us to have digital innovation and digital assets here in the United States. So I think what you're seeing here in the Senate with the struggle that they have had to pass a payment stablecoin bill, which is not an overly complex bill. It has taken them 3 months to pass the bill and nearly 2 months of wrangling for floor action to pass that bill. And that is because Democratic lawmakers have major concerns about the Trump family activities in the world of digital assets. Now, they're going to overcome that, and I think clarity of law here will provide a rules-based regime for the United States to engage in digital assets, and will clean up a bit of the market dysfunction that we've seen with some of the excesses of crypto over the last decade.
What gets done first, reconciliation or the Clarity Act?
I think it's going to be reconciliation. The backstop here is raising the debt ceiling, and that is why the reconciliation bill has to take precedent. But I think they're going to be able to do both. I think I give them really a better than even shot of getting both done before the end of July, before the August recess.
I hope our viewers and listeners heard that from the former chair of the House Financial Services Committee. I feel like that's tradable.
But like I said, it's going to be a long, hot, nasty, crazy summer here in Washington. Yes, it's going to be fun for us to talk about it.
Yeah.
I miss you all in the studio. This is a very lonely place here in the studio without both of you here.
Thanks for keeping the chair warm. Look, I think we're blessed to know that we will have Patrick McHenry with us for the summer. Thank you for being with us, Mr. Chairman, as always. Bloomberg contributor Patrick McHenry. I just like saying it, Kailey.
Yes, in addition to all of his other decorated titles, indeed. Former chair of the House Financial Services Committee, weighing in on all of the stories we're following today. A meeting between the Fed chair and the president, a president who was called a chicken yesterday and now is faced with a ruling that is stopping some of his tariff ability for now. We'll have more of it on the late edition of Balance of Power as well. So we'll see you at 5 p.m. Eastern here on Bloomberg.